Good morning, this is latest market news. I'm Uliana. Asian shares were mostly higher on Friday, with China staging a rebound following the confirmation of Li Keqiang as China's premier, and Tokyo climbing after the National Parliament approved the Bank of Japan's next governor. The main event in Japan was the parliamentary approval of Haruhiko Kuroda and his deputies to take over the Bank of Japan. The development means that the central bank will be under new management from March 20, which is widely expected to lead the implementation of more aggressive monetary policy. Japanese shares were higher with the Nikkei Stock Exchange up 1.2%. Japan was the best performing Asian market this week, up 2.0% week to date, as investors remained optimistic that the change in leadership at the Bank of Japan will help the local economy's recovery. The US dollar rose slightly against the yen after the parliamentary approval before edging lower, and was recently at 96.10 yens compared with 96.11 late Thursday in New York. In the Bank of England's quarterly bulletin released overnight, the Great British Pound rallied after investors got wind of news that public finances will be bolstered by $25 billion worth of transfers from the Bank of England in several payments running until 2019. In other key elements of the bulletin, the Bank of England said market sentiment has improved significantly in the first quarter of this year as a result of central bank policy, as well the US deal achieved to avert the so-called fiscal cliff. Bouncing a full cent and a half from earlier lows, the sterling is notably stronger this morning, back up above the critical 1.50 mark against the greenback, opening at 1.5076. On the outlook today, a handful of releases from the US, including industrial production, core CPI, and consumer sentiment, will be key in determining short-term direction. US February Consumer Price Index 1230 GMT is expected to have risen by 0.6% versus a flat reading in January. The less volatile core prices are seen to have increased by only a 0.2%. The Fed's current asset purchase policy thresholds include consumer prices, but given the high level of unemployment and relatively sluggish economic activity, there is little danger of inflationary pressure. One should note that a few monthly CPI numbers above expectations could strengthen the worries of the more hawkish members of the FOMC. It was the latest market news provided by ICO FX. Goodbye.